Hi, my name is Tyson Romanek, Portfolio Manager here at Baker Boyer, and I wanted to thank you for joining us for our monthly market update. So today, I'm going to take you back a year and a half to 2022, which was a particularly painful time in markets for all investors. And the reason being is there really weren't any safe havens to hide in. You know, both stocks and bonds had a rough year, especially bonds. It was the worst year in 150 years. Now, whether you were a conservative investor, you had the majority of bonds, or you're an aggressive investor and you had majority stocks, most likely your portfolio was down, double digits. And that's kind of why, it was so painful for a lot of people. So at the time, you have to remember everybody was worried about a looming recession. And this naturally led people, to question whether or not they should be in equities at all or stocks. And so they came to us with these questions, and as a portfolio manager, you really have to think about two things when you're making portfolio changes. And first, you have to think probabilistically. So not binary, yes, no, in, out. You have to think of what is the likelihood that this thing will happen. You have to remember in markets, nothing's ever certain. So back then, we saw a pullback. People were wanting to leave stocks altogether. We did make a change. We added some US Treasuries, which usually work really well in recessions, but we didn't do anything drastic. Now, the next thing you have to think about is whether the thing you're worried about is already priced in the market. Now, you have to remember markets tend to look ahead. So anything going on today, any event most likely was priced in market movements, 12 to 18 months ago. And so with that, you have to really be sure that what you're worried about, isn't priced in markets. So, a lot of people did get out because they were worried about this recession and they got completely out. And then 2023 hit and we had an amazing run in stocks. And, we're almost back to where we were, pre-2022. And if you were panicked and you left, you likely missed this run up. So this just leads us to a valuable lesson, when faced in volatile markets. Not only do you have to look at what is the probability that this thing you're worried about happens, but then you also have to, add to that whether that thing has already been priced in the market. So, fast forward to today, we get a lot of people now that are worried markets have run so much, should we pare back or get rid of stocks because they've had quite the run? And you have to remember the market isn't a single entity. There's a lot of moving parts to it. So right now, even though we've had markets run, a great deal since the beginning of the year, there's still great opportunities if you look for them. So right now, value stocks and international stocks still look fairly valued. And then on top of that, you have bonds, which have higher interest rates than they've had in a very long time. So with that, I want to thank you again for joining us, and we'll see you next time.